Have you ever stopped and wondered who really owns the biggest companies in the world? You know, the ones that shape our daily lives. Well, the answer is kinda simpler and way more concentrated than you probably think. Today, we're pulling back the curtain on two financial giants that are quietly but powerfully steering the global economy. Let's dive in. Let's just start with a number, $19 trillion. Just try to wrap your head around that for a second. That is the insane amount of money, of assets, managed by just two firms, BlackRock and Vanguard. It's a number so big it almost doesn't feel real. So to put $19 trillion into some kind of perspective, we're talking about roughly 10% of all the world's assets. And that includes everything, every stock, every bond, every building, all of it. And about a tenth of that is overseen by just two companies. Which brings us to the big question, right? How on earth did we get here? How did two companies manage to gain this much control, this much influence over the entire global economy? Well, it's a story about a huge shift in how we invest, some brilliant ideas, and a concentration of power that most of us don't even realize is happening.
So first up, let's actually meet these two giants, because while they're often lumped together, they come from very different places. One is basically a tech company that built its empire on data, and the other was started with this almost revolutionary people-first idea.
On one side, you have BlackRock. They are the biggest asset manager on the planet, and they're famous for their Aladdin technology. You can think of Aladdin as this massive, all-seeing risk management system. It's like the central nervous system for a huge part of the financial world. And then there's Vanguard. They're the ones who really pioneered the low-cost index fund. But what's really unique about Vanguard is their structure. Get this. The company is owned by its own funds, which means if you invest in a Vanguard fund, you're kind of one of the owners.
BlackRock's journey has been just meteoric. I mean, they were founded back in 1988, but the real game-changing moment was in 2010. That's when they bought iShares. This one move made them the undisputed king of ETFs. Those are exchange-traded funds. And it just poured rocket fuel on their growth, catapulting them to managing over $13 trillion today.
Okay, so they manage a ton of money. But here's the thing, it's not just about collecting fees on all those trillions. The real story, the one we need to understand, is how all that money translates into actual influence. And to get that, we have to talk about something called passive investing.
So for the longest time, investing was all about trying to be a genius, right? Picking the winning stocks, trying to beat the market. And then Vanguard came along with this ridiculously simple but revolutionary idea. They said, hey, what if instead of trying to beat the market, we just owned the market? So these passive funds don't pick winners, they just buy a little piece of almost every major company out there.
And this is the crucial part. This is where the power comes from. Millions of us, you, me, our parents, we put our retirement savings into these big passive funds. The fund manager, BlackRock or Vanguard, takes that money and buys up shares in all those companies. So while it's our money, it's them, the asset manager, who gets to cast the votes that come with all those shares.
And that's the kicker, right there. As one person put it, these firms are really just holding our money for us. They're custodians. But, and this is a huge but, they don't pass the voting power down to us, the people who actually own the shares. Instead, they vote as one giant unified block. So what does all this concentrated voting power actually look like in the real world? Well, it means that BlackRock and Vanguard get a massive say in what happens inside the boardrooms of pretty much every major company you've ever heard of. Okay, check this out. The big three asset managers, that's BlackRock, Vanguard, and their other big peer, State Street, are combined the single largest shareholder in nearly 90% of all the companies in the S&P 500. 90%? That's wild.
And this table just says it all. I mean, look at this. The biggest, most powerful companies on the planet. Apple, Microsoft, Amazon, Tesla. Who are the top two investors in every single one? It's the same two names again and again. They are always one of the loudest voices in the room.
Now, as you can probably imagine, when you have this much power in so few hands, you're going to get some serious debate and controversy. And it's coming from all sides. So let's break down the big arguments. So one of the first big worries is something called common ownership. Think about it like this. If BlackRock and Vanguard are the top shareholders in both Coca-Cola and Pepsi, or in all the major airlines,
Some critics wonder, does that reduce the incentive for those companies to really truly compete hard against each other? It's a tricky question.
And then there's the whole ESG firestorm. For years, BlackRock's CEO, Larry Fink, was really pushing companies to think about environmental, social, and governance issues. But this put them in a massive political crossfire. On one side, you had states like Florida pulling billions of dollars out, accusing them of pushing a woke agenda. And at the exact same time, you had climate activists blasting them for being the biggest investor in coal power. They were getting hit from both sides so hard that Larry Fink basically said he's done using the term ESG because it's just become too weaponized.
BlackRock's big move into China has also raised a lot of eyebrows. On one hand, the company says, look, we have to engage with one of the world's biggest economies. But on the other hand, you have major figures like George Soros calling it a tragic mistake that puts U.S. national security at risk. It's gotten so serious that a U.S. congressional committee is now investigating their investments into some of these Chinese companies.
All of this, the market concentration, the political battles, it all leads to a question that should sound eerily familiar from the 2008 financial crisis. Are these firms just too big? Are they too big to fail? Some people are now arguing that they're so central to our entire financial system that they should be regulated just like the biggest banks in the world.
So why should any of this matter to you personally? Because this isn't some abstract story about finance. It's about your money. The odds are your retirement fund, your 401k, it's invested in a BlackRock or a Vanguard fund. Your financial future is literally part of this story, and it's your money that gives these firms all their power.
And that really leaves us with the one question that matters most. When just a handful of executives at two companies get to cast the deciding votes in boardrooms all across the world using the retirement savings of millions of ordinary people, who are they actually accountable to? Is it us, the investors, or is it someone else?